All right, RLT members. It's September 20th, 4 o'clock. So market just closed, but here we are. We're going to talk about, we're going to do some more discussion on price action, analyzing price action volume, and because a couple good examples today. But before I jump into it, question for the group. I just want to, is there anybody who is, has an issue that they want to discuss, anything that they need help with? Could be anything. Albert, how are you? So if you have anything you want me to address or give you some help on before we jump into this, just go ahead and throw it into the chat. I'll give you a second. when I don't know if I can help you with that. That's that. Okay. How about this? How about trading related? How about we go with trading related stuff? I'm not even going to read out loud, on this recording what you actually put there, just in case, that certain someone never happens to hear it. Let's see. Matthew is saying how to set up sideways volume indicator like you have. I only know how to do the bottom one. Oh, okay. That's easy enough, Matthew. Real easy, super easy. Let me hide this. We don't need to see this. Okay, so super simple. And Matthew, let's see. I'm going to pull this up. You can take screenshots of it if you want, or I'm recording this. I will post it in Slack after the session, so you can get it there, or you can also go in and watch it on my personal YouTube channel, which is typing it in the hopefully I typed that right. At Stock Traders Journey. That's on that's my I forgot the S in that, but it's at stock. No, I got that right. Yeah, at Stock Traders Journey. It's anyway, that's my personal YouTube. So you can either get it on Slack or you can go there and watch it there. But all right, let's take a look at the settings. Okay. And before I do, real quick, also let's shake it up a little bit. Go with a little video. Why not? How's that? A little bit better? Get a little video action going today, so you're not just hearing a voice. All right, Matthew, here we go. Here's what we're going to look at. So just Matthew, real quick, confirm you should be looking at a chart right now. This is a 5-minute or 3-minute chart of NIO. Cool. Okay. So if you right click and go to your studies, and then we're going to edit studies. Okay. So here is the study, which is just volume profile. Oh, in Trading View. Okay. Yeah. So Matthew, Wim will help you out with that. Okay. Because I've got I know Trading View, but I don't have it up right now. And so so that we don't slow down, we have an hour to go through some of the stuff I want to go over, but Win can help you out with that. Win knows how to set that up in Trading View. Sorry, I thought that you meant in Thinkorswim. Is that cool? Okay. All right. So then let's just jump into okay, thank you. Win's putting that in the chat for you. So he'll address how to do that in Trading View. All right, so let's jump into then. Let's look at analyzing price action and volume. So I've got a chart up here on NIO, and I know a lot of times people are asking, well, because lately, given the market, right, we've just been in this bullish move. So a lot of the examples that we've been covering and going over have been bullish trades, just because you trade with the market, and most of the setups that I've been presenting and showing you are those bullish setups. But we've got a couple things to look at here on NIO. All right, so on a 3-minute chart, and we blow this up a little bit. All right, so 3-minute chart. So again, what am I looking for? Let's go over it, and we go through this, each time we do a session. But I'm looking for double tops, double bottoms, shooting star at the top of a move, hammer at the bottom of a move. But the key to all of it is volume spikes. I'm looking for some type of a volume spike on the move, either near the top of the move or the bottom of the move, to suggest to me that it's running out of steam. Okay, it's either exhaustion buying, it's exhaustion selling, it's capitulation, the term that I throw out there a lot, right? So just throwing up their hands, giving up. Okay, whether it's the bulls giving up or the bears giving up. But so here's a couple examples. Okay, so Neo, right? Neo here moves up, comes up here, makes a new high for the day. Okay, now volume on Neo, you're not going to see the same volume as you do like on, let's say, Tesla or Nvidia or AMD, but still, it's all relative, right? So if you come in here and you look at Neo, and look at the volume down here, right? Just little bumps, right? There's really not anything that is jumping out at you, but you get a couple volume spikes, right? So on this candle here, right? Look at the size of that volume. And again, you look at this, it doesn't really compare to Tesla, but this is still almost 2 million shares right there, right? It's 1.7 million. I mean, that's quite a lot of shares, even though volume wise down here doesn't look like a lot. Okay, but if you look at the volume on this candle, right, and just consider the candle itself, right? Big body, yeah, it has a lower wick and an upper wick, but still it's a big body. I would say that's a pretty strong bullish candle. Okay, pretty strong bullish candle. And look at the volume, right? Now it makes the move up, and now here's the previous high of the day right here, right? And it closes above the previous high of the day. And you think, okay, it's going to run, right? It's going to make a move. It just closed above. And a lot of people will watch that high of the day and go, okay, well, if the high of the day can get broken, then that's the direction. It's going to run that way. Well, look at this candle, okay? And look at the volume. And again, it's as it breaks the high of the day, and what happens? Volume picks up. So here we have just over 2 million shares. Look at the size of this candle compared to the size of this candle, right? Much smaller candle in terms of the body, but greater volume. And it's right when it's making the new high of the day. So that is something that catches my eye. I look at that and I go, okay, volume picked up as it broke the high of the day and actually closed above the high of the day. Volume picked up, but it's a smaller candle than what I saw over here. So that is what will catch my eye. Very next candle, what happens? The volume on this candle, right, is 1.4 million. So it drops off a little bit, but still 1.4 million compared to, let's say, this candle right here, which was 485, right? So you can understand that anything with Neo right now over like 1.2 million is pretty good volume, right? When you look, if you were to scroll through all the volume on the day, right, and you look at some of these candles, right, anything over 1 million, 1.2 million is decent volume. If you come down here and you look at these volume spikes, right? And then the low volume here, like for instance, look at the size of this candle on low volume. That volume was only 625. So you get the idea that you're looking for volume that is exceeding all the previous, not all the previous, but a lot of the previous volume on the move. And what do you get? You get a shooting star, right? So when people have asked about, okay, well, can we see a bearish example? Here is a great bearish example where new high of the day, it closes above, smaller body candle compared to this one, right? And I'm just looking at volume here, just comparing the volume. And then you get volume drops off a little bit, but it's still high compared to the average volume on the day. And it's a shooting star, right? That is what I'm looking for to go short on, okay? Joe's adding a comment in there for you as well. And Lucian jumped in there. Thank you, Lucian. Appreciate that. Thanks, everyone. Great. See, that's, teamwork, right? Teamwork. Everyone's helping out. Appreciate that. All right. So right here, shooting star. Beautiful candle, right? And as it made a new high. So how do you play it? Okay. So question for the group, and you all that who have sat in with these sessions with me know how I trade. Question for you is, this clearly would have been a great, if you took this trade that say just entry, stop, would have been a great trade. How many of you think, given what you know about my trading style, would I have caught this trade? I'm going to take a sip of water while I wait. So when? Question. Knowing my trading style, would I have caught this trade? Yeah, Joe's saying no. And that's the correct answer is unless, okay, when saying, I don't know, I got Ape Gator saying, AKA Ape Gator, probably not. No, the answer is it probably not. Okay. Because again, I love this setup, but I don't make a habit of taking breakouts and breakdowns because the majority of them do fail. Okay. This is a great example of one that would have worked beautifully. Right. So what I do is I wait for the candle to close. I would have looked for a strong close below this level. And by the way, what's this? The low is 9 here. The low of this is 9. So same lows, right? So pretty strong resistance there for, those 2 3-minute candles. And then it just rolls, right? So the way I trade is I would have looked for a strong close below this level, and then I would have wanted it to come back up and retest it and then roll over. So if I'm being completely honest and transparent, I likely would not have gotten this trade because, again, I don't make a habit. It's not that I don't ever take breakouts or breakdowns, but the majority of time I don't, because it keeps me from getting caught in a bear or a bull trap. So I will wait for the close below this level. Cindy K, nope, didn't take it. Okay. And this is actually just an example that I found. Neo's one that I have a position on, and I was just happened to be looking at it, and I saw that beautiful shooting star, and I thought, okay, that's a pretty good example for me to show for a short trade. So no, I didn't take this trade, and I was just pointing out, Cindy, that I likely, even if I was watching it at the time, I likely would not have gotten triggered in on that trade. Yeah, it would have been an amazing short. It would not have come back up. It clearly didn't come back and retest this level. So, unless I took the break down, which is not really how I trade, I would not have gotten into that trade, right? So anyway, but if you did take the breakdown of this, that was a beautiful trade. Here you get the strong bearish candle right here, and then you get a little 3-bar pullback. It drops again. Then you get this little, shelf or cliff, whatever you want to call it, that just, sideways movement, and then it rolls again. It's a great looking trade. Okay. So yeah, so Cindy's saying no retest. That's right. So again, this is not a trade I would have gotten triggered into because I don't generally take breakdowns like that. But that would have been, if you do take breakouts, this would have been an amazing short for you. You would have easily got 2 R's out of that if you held. By the way, where would you have been looking to hold to? It's great. You got to know that, right? If I'm entering the trade, I have to know where I'm going to. Well, if I look over here, so win, right? That's a great answer, low of day, right? But low of day is here, right? There's your low of day at the time. I personally, the way I approach this is everyone knows that, right? Everyone's looking at that low of the day. It's a very obvious target, right? I go, I'm not going to be like everyone else. I'm going to be a little bit different, right? So I would look here and I would say, okay, well, where, where was the support just before the market opened, and if you look here, it's very clearly right here, right? The low of this candle is basically about where this candle opened, and it lines up perfectly the low of this candle, the bottom of the body of these two candles, the low of this candle. So that would have been my target. If I had taken this trade, that would have been where I was targeting. Okay. Now, does that mean I take everything off there? No, not necessarily. Right. Way I like to trade is maybe I would take off at that point. I've got 90% of the trade off and I'll hold another 10 to see if it can run. In this case, would it have run? No, that would have been, it would have seen how it came back down here again. So, it would have, and then quite frankly, if I was using, let's go into a different, let's go into a 5-minute chart real quick. Okay. So 5-minute chart, if I was using the 5-minute 2-bar trailing stop that I've been explaining, talking about, my stop, let's see, if I was targeting here, and let's say I wanted to take 90% off, right? And who knows, would I've gotten filled on that? I don't know. That would have been close, right? But let's say I took off 90% of that trade here, right? At that point, after this candle, if I go back, so again, I'm not going to walk through the entire process of the 5-minute 2-bar trailing unless somebody needs me to, right? If there's somebody new here that is not familiar with what I'm talking about, throw it in the chat and I'll run through it real quick. And please, this is your time. So if there's anybody who's not familiar with what I'm referring to, the 2-bar 5-minute 2-bar trailing stop that I use, just ask me to explain it in the chat and I'll go through it real quick. All right, nobody's responding, so I guess everyone is familiar with it. So when this candle closed, right, I would have gone back 2 candles, 1, 2. My stop would have been here, somewhere up here, right, above this candle. So once this closes, count back 2, 1, 2. My stop is up here, right? Albert, what do I think of 50% retracement of the big bearish handle? I mean, I love the fib. I love the fib retracements, right? For entry. Are you talking about 50% of this candle right here? I think that's what you're saying. Yeah. Yeah. I mean, look, you can do that again. And that's the beautiful thing, Albert, about trading is like, you do you, right? You have your trading plan. I have mine, and doesn't mean mine's right, yours is wrong, or yours is right, and mine is wrong, right? It's whatever you decide is part of your plan. Okay. And call it, for me, I don't know, call it greed, call it, what you might, but like, this is where I want to get filled. Right. And so because of that, sometimes I miss trades, and that's okay, because I can look at this and go, yeah, well, this meets my plan perfectly. And it just reinforces that my plan is the right plan. Now, again, I've talked about this. Maybe, and then again, we're on a 5-minute chart here, so we're not seeing that same shooting star that we saw in the 3-minute. But again, I've talked about this. Maybe I need to revisit my plan, and because the number of times I've seen a shooting star at the top of a move or a hammer at the bottom of a move, and I talk about it, and I look at it, and a lot of times I would have missed it because I don't take breakouts and breakdowns, right? So maybe I need to make an exception for the shooting stars and the hammer candles, right? But that's for me to sit down and reevaluate with my plan and figure out. But yeah, you could easily do a 50% retracement into this candle right here, and you likely would have gotten triggered in on this wick. That would have been perfectly fine as well, right? The challenge there, Albert, is, and again, it's a perfectly fine entry. The only challenge here on that is the reward to risk, right? So if you're here and it depends on where you put your stop. Are you going above the high, which is where I want to have mine, right? That's a pretty, then you're looking at like a 1.2 down here. And again, that still meets my plan, right? My rules are, when I look at my reward to risk, when I see a trade setup, I need a minimum of 1.2, 1.4 to my target in order for me to be able to take that trade. Ideally, I want to see a 2R, right? But at a minimum, it's going to be 1.2, 1.4R. So anyway, back to this example, my stop would have been above this candle, right? So as it retraced here, right, this would have, I'm still, in order to move my stop down, technically I need a lower low and a lower high compared to this candle before I can move my stop down. Now, that didn't happen until back here, right? Wait, I would have had to hold with this stop here all day long. Now, would I have done that? Probably not, right? I mean, look, I don't want to, one thing I don't like doing is being in a trade all day long. Like, I want the trade to work. I want it to work quick. I want out. I want to move on to the next one. So, but if you look at this and say, okay, well, trading it, per the rules of this 2-bar trailing stop, I would need a lower low and a lower high compared to this candle, which did not happen until here. And then I could have moved my stop, count back 2. My stop could have been up here, and then I would have gotten trailed out here. Would I have held it that long? I doubt it, right? At some point, I would have gone, okay, probably when it made this move and went all the way down here, I probably would have moved. Again, keep in mind, I'm taking 90% off here. So I'm only holding 10%. But after this big candle was down here, I'm probably moving my stop right above it, right? Something like that. Let's see. Win says, I know that you looked for a hammer, shooting stars, double tops, double bottoms, at support resistance with volume spike, but I forgot about the retest part. Yeah. So Win, yeah. I look for a confirmation candle to show me that the move is happening, and then I set up that either a limit sell or a limit buy. Yeah, and again, the reason for that is that the majority of the breakdowns are false, or they don't follow through. So, and this is just my personal way of trading so that I don't get caught in those traps. Okay. So anyway, pretty good example here. Again, that was on a 3-minute chart here of NEO, right? So I saw that one, wanted to share that one with you. All right. Let's see. We go into, there were a couple others here that, Tesla. I know everyone here loves trading Tesla, or the majority of you do, right? Okay, so today, all right, beautiful double top, right? I think everyone can clearly see that double top, right? Now, so let's just kind of walk through again. Now I'm going to move this up to a 5-minute chart, because at the time of day that would have happened, we're talking like, 1, 2 o'clock, I would have for sure been trading on a 5-minute chart at this point, right? And again, I don't mean just solely on the 5-minute. As you all know, I'm going to be trading 5-minute, 15-minute, 30-minute at this point, even looking at the hour. I mean, I always look at all those time frames, but in particular, right, that late in the day, if I'm trading off the 5-minute, I am using the higher time frames. Again, multi-time frame analysis. I'm using those higher time frames to confirm the move, right? Is it ready to make that move? So let's take a look at Tesla. So comes down, well, I mean, look, there's a couple opportunities here, right? Here's a perfect double bottom, right? Tesla comes up, comes back down, double bottom, right? It's a perfect double bottom. Let's just zoom in a little bit, right? The only caveat to this is, again, no volume spike. right? Now, does that mean I don't take the trade because not a volume spike? No, it doesn't. What it means though is that, I'm going to, I'm going to trade this, just based on the fact that it's a double bottom. So back to, looking for a conference. So if I, I mean, look, this is quasi hamburgish. It's not, the body's a little too big, right? The body is actually bigger than the wick or close to it. So it's not really technically a hammer candle, but it's still a double bottom, right? So again, how do you trade it? It's like, okay, well, double bottom, right? You immediately will throw in, like, I'm looking left here, right? I'm just looking through here and I want to see a level above here, right? Or right near it that makes sense, right? So I've got the lower part of the bodies of these candles. I have the low of this candle. I've got the high of this candle. Once this candle close, right, I've got the body of that. So, and again, that's not an ideal close for me. It's okay. Like if I have to rate it on a scale 1 to 5 to 2, right, maybe a 2.5. It's not perfect, but it's, because why, right? Well, I prefer to see if this had closed with the body with no upper wick or just very little upper wick, more like what this one looks like, but with a lower, maybe not that big, but if there had been more of a body, right, of this. And also, if you look here, the high of this, 266.29, high of this, 266.29, right? So this candle closes, and you've got the same high, right? So again, if I'm looking at this, I'm going, well, it's the same high. That's the level that needs to get broken, right? Okay, we'll take a look at that in a minute. All right. Yep, for sure. Take a look at that. So here, right, you got to also be looking at, here's a nice 3-bar reversal, but this candle and this candle both have the same high, right? So is this a strong close? No. Again, I rated it like a 2.5, and now that I'm actually like diving into the high of it, it's really not that strong. So what would I have done? I would have, and again, I would have at this point waited for this candle to close, and then I would have set up a limit by probably going off here in these candles, probably something like that, right? And again, would not have caught that trade, right? No retest. Here's that, but this is a great example of what I'm looking for, right? What I'm looking for is there's double bottom. There's clearly a strong level of resistance right here because these both had the same high. This made a higher high, but look, it got rejected, right? So this is clearly a level where the bears were trying to keep price down. Then they give up. And then you get this big bull candle, right? That's when I go, okay, great. There's my confirmation candle. Throw in the limit buy. My stop is down here, right? Do I get triggered in? No, I don't. It just runs without me. Okay. But again, that's okay. And I'm okay with that, right? I don't get upset when I miss a trade like this, right? There's no FOMO. I don't get caught up in FOMO. I don't think about it. I just be like, okay, Paul, if I had done this, Paul, entry would have been here and the stop would have been down here, right? I don't know if that's maybe a little too tight. Would have been maybe a little looser. But anyway, below this candle, right? Below that double bottom pivot. That's where my stop would have been. So do I get upset that I missed the trade? No, right? Just let it go because there's going to be another trade, right? Plenty of trades. So but again, if you are a breakdown trader, really it was these two candles, that was the level that needed to get broken in order for it to run. And it did. And it ran beautifully, right? But then let's go into, well, I'll tell you what, before we do, let's jump into, that was 11:25, right? So we always take a look at the higher time frames. Let's do that real quick. 11:25, what were we looking like on the 15-minute chart? So 11:25, right? So right in between these candles here, right? 15-minute chart. It's not looking bullish to me, right? Another reason why I wouldn't have jumped on that trade, just because I'm not seeing on the 15-minute chart anything that would have indicated to me that, okay, this is ready to run. And again, I'm okay missing it. 30-minute chart. So this was what I said, 11:25. Let's go into 30-minute chart, 11:25. Let's see what this looks like. Right? Okay. So again, it's kind of right? If I look at this, I'm looking at two candles with basically the same high. Let's say 267.14. Yeah, basically the same high. So I'm not seeing anything on the 15-minute and the 30-minute chart that is like wowing me, right? And that's what I want to see. I want to see all these charts in alignment. And again, if I pass on the trade, I pass on the trade. And clearly this is one that would have worked great, but I'm okay with that, right? I don't have to catch every single trade. But if we go back into the 5-minute here, and now let's go in and let's look at this double top, okay? So makes this move up here, right? And you get this, kind of like a spinning top candle, right? It's a doji, more or less, right? Not a shooting star. But you get a volume spike. It's a nice looking candle, right? So again, how would I, yes. And then here's my confirmation candle. So could have taken that trade. My entry probably would have been somewhere like here, right? Maybe a little bit lower, but somewhere I would have probably looked to split the lower wick here, right? If I put it up here, that's too aggressive. And I really don't want to see price come all the way back up to basically the high of this candle, right? But I'm okay if it throws up a wick up into that candle. I could even bring this down a little bit, right? But somewhere in the mid to lower part of this wick is where I'm going to throw my entry, right? Stop up here, right? Because here's the close below it that I wanted, right? Would I get triggered in? No, right? And look, looks like I'm going to give you a lot of examples of trades that I would not have gotten triggered in because just my style of trading. And that, again, I'm okay with that. But it's important for you to be able to recognize, right, the volume spikes. Albert saying, question, say for the same setup and you get triggered on a solid bull candle, do you move your stop right away? So Albert, okay, if I get triggered, right, you mean like a candle that looks like this, right? Let's say I get triggered in and it's not an upper wick. Yeah. Okay. Yeah. I'm certainly going to be more aggressive with my stop. Okay. Because here's how I know that I'm right on the setup is if I get a nice wick up into that level and then it rolls. Okay. If it comes down here and all of a sudden I start getting solid candles coming back up, right? It's too soon. But again, I'm going to use the higher time frames to help me, validate the trade setup. So we'll do that in a second. But yeah, if I get, what I'm looking for is this kind of a candle right here. So let's say if I have my entry right here, right? That is the perfect candle that I want ideal candle that I want to get triggered in on that limit sell is candle that opens, runs up, throws in a wick and comes down. But yeah, if I get a solid candle like that, I'm gonna be thinking to myself, okay, timing's off, right? It's not ready to roll over. And yes, I'll be a little more aggressive with my moving my stop. Okay. But let's go into real quick. This was a 1320. Let's go into, so 120, let's go into here, right? 5-minute, 15-minute. Right? There you go. See, it's beautiful, right? But again, think about the time of day, right? So here, right? Look at this candle. Okay, on the 5-minute chart, it's a bearish candle. On the 15-minute chart, you have this bullish shooting star, which is fine. Again, I don't care whether it's bullish or bearish. It's the sentiment of the candle, which is this long upper wick. Okay. But again, at 13, at 1, almost 1:30 in the afternoon, right? I'm going to be looking at the 15-minute chart the same way I look at the 5-minute chart, meaning I want to see a close below this level, right? Where's my close below that level? Well, it doesn't happen until here, right? So, and then it happens with a hammer. So I'm not, chances are, right, if I'm getting wicked in here, right, I want to see this roll down 1320, 1315. Yeah. So anyway, I want to see it's nice that there's a shooting star here, but I also want to see all the time frames in alignment, right? And 15-minute is not in the same alignment, meaning I'm not seeing a strong close below this level. Let's go to the 30-minute. Give me a second. This was, 1320-ish. Yeah. So at this point here, right, I'm looking at these two candles, and on the 30-minute chart, I'm definitely not thinking bearish, right? This just made an incredible strong move. Granted, there's a lot of selling pressure here. That's a pretty good bullish candle. Win, you like that? I know Win's liking the advanced volume profile. Right? So greater bullish volume than bearish. But anyway, you see, get what I'm saying is that right here, right? That's not screaming rollover yet. Okay. So all the more reason why I'm going to use these higher time frames later in the day, right, to help make my decision on timing, right? We've talked about the fact that you can be right on your thesis about what the move is going to be, right? Is going to run bullish, is going to run bearish. You can be 100% correct, but you can be wrong on your timing. And when you're wrong on your timing, you lose on the trade. Only then to 15, 30 minutes later, watch it do exactly what you thought it was going to do, right? Happens to all of us. So probably would have held off and taken that trade. No, I definitely would have held off, right? Because the higher time frames weren't telling me, right? And that would have kept me out from having to hold down through here. And then, and again, if I'm, using my trailing stop, right, as soon as I get a close below this level, this one here, which is, I'm likely starting to move my stop, right? And then at this candle right here, count back 2, 1, 2, right? My stop is I probably was better than break even at this point, and I would have gotten trailed out, right? Which, is that the worst thing? No, because I could always get back in. But again, I more than likely would not have been in this trade to begin with, because the higher time frames weren't telling me it was ready yet. Okay. So what do we do? Come down here, we bounce. All right. And that's the other thing that now, it didn't happen on NEO, but again, my thought process is that when stocks come up and they make a high a day and they pull back, I'm expecting a double top. I'm not expecting a single move up and then a complete rollover on the day like NEO had, right? Does it happen? Of course it happens. We just saw the example of it. But again, my thought process is, I'm thinking, let it double top, right? Don't take the initial breakdown. Let it come down, let it come back up, right? Again, sometimes I miss trades because of that, but I'm all right with that. So comes down here, bounces up here. And then again, look at the key thing here is, right, we got the volume spikes here. That was great, but the higher time frames weren't confirming the time, right? Is it the right time for this rollover? So comes back up, and then look at the volume on this candle, right? So compare this volume right here, draw a line. That volume compared to this volume over here, especially this one, which corresponds to this candle. right? Same volume. Look at that. That's 2.5 million, 2.3. Okay. Pretty close. But look at the difference in the sentiment of the candles. This was a very strong bullish candle with only a tiny little wick on the top of it, right? With basically the same amount of volume as this candle, but look at the high upper wick, right? Didn't close strong, right? That is what catches my eye. That's what jumps out at me as, okay, maybe this is time now. So that would have caught my eye. Then you get this candle that comes up. Is it a perfect shooting star? No, but it's a double top. And we got these volume spikes, right? And again, pretty decent volume on this one, right? And then you get this candle, right? That rolls over. Now, again, what am I looking for? We just talked about it. After I see this, I need a strong close below this candle, okay? Doesn't happen until here, right? This is a great example right here of a potential, because obviously it didn't happen, but a potential bear trap, right? Where everyone was setting up their orders, their entries under this candle, stop up here, price comes down, triggers in all the orders, runs down, comes right back up, and then off to the races, it goes bullish and stops everyone out. Now, didn't happen, but this is typically what it does look like when it is going to happen, right? So if I got triggered in this trade and then it came right back up, and Albert, you were asking before about, solid bullish candle, whether it's a solid bullish candle like this, or it's a candle like that with a long lower wick, either way, I'm going to be more aggressive with moving my stop, right? Because that is not to me, that's a lot of buying pressure down here, right? That tells me that the bulls were still there and not ready to give up. When do we get that? Yeah, so Albert, I typically will do when the market opens from let's say from market open until right when the market opens, I'm at 3 minutes, right? I'm not good at trading off a 1 minute or 2 minute chart. I'm just not that quick. I'm more data driven. So 3 minute is about as fast of a chart as I am good trading off of, right? Again, just knowing our strengths and weaknesses, right? So 3 minute chart is what I will trade off of based on market open. I will pretty much use that until 10 o'clock. And then I'm using the 3 and the 5 in conjunction with each other, right? Around 10:30-ish, right? I'm now moving over to a 5 minute chart. And then in the afternoon, certainly from after lunchtime, 1 o'clock, I'm using, so before when I was using the 3 and the 5, and again, I'm always looking at the higher time frames as well. I'm just talking about the two that I'm switching between very quickly is, in the early morning, it's 3 minutes to start the day. Then I'm using 3 and 5. Then I go 5:15, right? So at 1 o'clock in the afternoon, I'm not even looking at the 3 minute chart anymore. So I'm using the 5 minute chart. I'm using a 15 minute chart. And then I'm always looking at the 30 minute and the hour as well, right? So back here, this is the candle that gets a strong close, right? So after that candle closed, my entry would have been probably, and it would have been aggressive to try to get a wick all the way back up here. But I'm just looking at the bottom of this candle, the bottom of this candle, the close of this right here, the bottom of this body, right? The top of this candle. That probably would have been where I put my entry. Again, just because I like to be aggressive with my entries, meaning I want to sell as high as possible or buy as low as possible. And, I would have just wanted this to open here and just quickly throw in an upper wick or maybe 2 candles and then roll. So another example of something that wouldn't have triggered me in, and I'm okay with that, right? But you can see how this trade would have worked phenomenally well. But let's take a look at it in the higher time frame. So 1435. What are we looking like? Okay. So 1435, this candle closed, right? So it came down here And now we definitely have our double top, right? So double top with volume on this candle, right? And then here, right? So here's a really good example of Albert, why I'm using the 5 and the 15 at this point. And literally at this time of day, I'm likely mostly going to be using the 15-minute chart to try to pinpoint my entries. Okay. So here's a great example why, right? So here, it's not really as clear of where to, I was just kind of guesstimating in terms of my location for my entry, right? On the 5-minute. On the 15-minute, right? Look at this. This is the candle that I need the strong close below, right? That happens here, right? So this is 1445. 1445 is here, right? At this point, I'm not getting, that's strong close, right? I'm looking now, I got to get in. I need to come all the way back up here. You can clearly see on the 15-minute chart, that entry would have been way too aggressive, right? So where would I, using the 15-minute chart, and again, this is at what? 2:45 in the afternoon, right? So it's late in the day. My entry I would have used the 15-minute chart, and it probably would have been like right there, somewhere around there. I would have been looking at the low of this candle, right? The low of this candle. I would have found, and maybe I would have even gotten a little more aggressive on it. Maybe, I mean, even like right here, right? Something like that. I'm just using all this price action here to determine my entry, right? Again, because of the way I trade on the 15-minute, right? I got it here, right? Strong close below this level happened here, but you can see when I did the 15-minute chart, my entry would have been, when I threw on the 15-minute chart, based on a 5-minute entry, too aggressive, right? That was way up here. But if I look at the 15-minute chart, I could say, no, that's really where my entry needs to be here, right? And if you look here on the 5-minute, you would get the impression that it's not, that I'm not selling as high as possible, right? But I also would have missed it because I would have been too aggressive with trying to get filled up in here. But what happens by using the 15-minute chart, there's my entry. Confirmation candle, strong close below this one. That's what I'm looking for. It closed below this candle. It closed below this candle. Not the lows, right? But the bodies, right? Then upper wick, and then the roll, right? So where would I, now the stop, I could go above. I mean, at this point, right? I don't have to go above the high of the day back here. I can go above here, right? It's not that big a difference, but let's say my stop was more like that, right? But that still would have been a solid 2-hour trade, right? And again, even though I'm taking it on the 15-minute chart, right? I can enter my trade on the 15-minute. I can still manage it on the 5-minute, right? So let's say on this one, I got triggered in, right? Somewhere, one of these candles triggered me in, right? As soon as it starts rolling, after this candle, I'm definitely moving my stop right here, right? After this candle close, my stop is here. Again, I don't want to be too aggressive and get taken out of the trade. I want to give enough room to work, but I also don't want to give back a lot of that profit that, I would have just realized. So after this candle, my stop would have gone here, right? Count back to 1, 2. After this one, well, the high of this, the high of this, the high of this are all pretty close. So I would have been here. After this candle, count back 2, 1, 2. So let's say I move my stop to break even at that point or close to it. I need now a lower low and a lower high compared to this one. It doesn't happen until here, right? But as soon as that happens, my stop's right here, right? Boom, right? This one, go back 2. I'm inching my stop down a little bit to here. After this one, go back 2. It's above here, right? You can see how methodical that is and how you can just move the stop with the price movement, and it will, and again, the 5-minute, I don't do this on the 3-minute chart, as I mentioned before, right? So I'm not using the 2-bar trailing stop, using a 3-minute chart. It's too quick. It doesn't give you enough of a cushion. 5-minute works perfectly fine. And I can take the trade on the 15-minute chart over here, but then manage it over here with the 5. Right. All right, got 8 more minutes. I'm going to go back to, let's see, who was this? Was it Albert that was asking? No, Ape Gator. Okay. Today's SPY 5-minute. Let's go to SPY. SPY at 2:30. So Jeff, is this the one that you were looking at here? Yeah. Yeah, so it's okay. So what I'm looking for in the other examples is it was a shooting star at the top of a move, right? So this was not the top of the move, right? So in those other examples, the shooting star occurred at the very top, right? Either whether it was a double top or just, the high of the day, and then it rolled. This is just basically the retest of, if you look, right? So SPY was basically just in a channel, right? All through here. And finally that channel broke and then it retested, right? So, but here's another really good example of when price gets broken, right? Support resistance gets broken, more often than not, price is going to retest that level before it then resumes the move, right? So here's this channel. And again, price can break through the channel, right? It needs to really get through it in order for that channel to be broken. It just penetrated here, came right back in, right? And then it finally, this was the candle where it really broke, right? Boom. That channel at that point is broken, right? I think we could all agree that this is a pretty strong break, right? Close. But then what happened? All that happened was prices came right back up, right? It retested right into this, and shocking, not really, right into the point of control, right? This point of control is all price was doing all day long up until this break here at 2 o'clock. All that was happening, that was price was just bouncing around above, below the point of control, right? All that means is that this area here, right, these two lines that I have, that just means that price is bouncing back and forth between there, right? So all the buyers and sellers were in agreement at that point with basically where price should be. And it wasn't until here that it broke, and then it broke, and then it came back, and it just retested that point of control, and then it rolled, right? So so Jeff, to answer your question, not exactly what I'm looking for in terms of, but it did have a nice volume spike, right? So, and again, just because I'm saying double tops, double bottoms, and using those examples, look, back trade this, right? The key thing to this for me and all of it is the volume spike, right? That really is the main thing. So if I'm seeing a volume spike and you go, okay, well, it's a volume spike and it's happening right at this level right here, point of control, which was the battleground for the better part of the day, then yeah, that makes sense, because it's exhaustion buying right into an overhead resistance level, right? Because previous support becomes resistance, right? Boom, right into it. And you get that volume spike. So you can apply this principle. It doesn't have to be double tops, double bottoms, shooting stars, all that. Just be aware. The key thing is being aware of the volume spikes and where they're occurring, right? So that's the key thing, Jeff, is where are the volume spikes occurring? And here it's occurring at the point of control, which again, throughout the day was that area where the buyers and sellers were mainly in agreement on price, right? so in my other example is where it was happening was at the high of the day or the low of the day or what have you, right? So it's really just the key thing is where that volume spike is taking place, but that there is a volume spike. Is that okay? So Jeff's giving me a gator. I love that. Jeff's giving me a thumbs up. Does that make sense? Good stuff. Hey, Win, at some point, I would love to get on a call with you again, just, and talk about, I just want to pick your brain about the, how you're using the advanced volume bars here. So at some point I'll reach out to you and we'll set up a call if you're good with that. So I do like it. It's interesting, right? Yeah, it is. So, it's one thing to look at the volume here, right? But it's another thing to look at it over here and really understand, look at that and go, get just a visual of what the, what the buying and the selling was on this. Yeah. Pete, are you asking what this down here? Yeah. So that is something that Win actually turned me on to. So that is, they're called advanced volume bars. And Pete, I'm not sure if you're using Thinkorswim or if you're using TradingView or what have you, but I think, Win, you'll know the answer. TradingView has this as well, right? The advanced volume bars, or is it just Thinkorswim? No, it doesn't. Okay, so Thinkorswim. But anyway, so Pete, they're called advanced volume bars. And the difference is, right, because you look at, when you look at some of these candles, right, you go, okay, well, yeah, it's a big bearish candle, but to be able to look at it, in this context and go, well, how much of it was buying, how much was selling? Just, it's just a visual way. When saying that TradingView does have a similar. All right. Okay. I see Tony just logged back on. It is time for the afternoon room. I am going to stop the recording